For the third year in a row, the Pakistan Stock Exchange has been a global standout. But, the story of 2025, it's something else entirely. So today, we're going to break down this incredible story of resilience, confidence, and, of course, some absolutely remarkable returns. So let's just start with a number that had everyone talking. 51%. That was the massive return for the KSE 100 index. Now think about that. In a world where a lot of major markets were just happy to get single-digit gains, this performance was phenomenal. And believe it or not, that's not even the whole story. Because if you zoom out just a little and look at the last 3 years, the cumulative return is a staggering 249%. This isn't just one good year we're talking about. This is a historic multi-year bull run that has put Pakistan's market right at the top globally over this period. Just incredible.
So the big question is, how on earth did this happen? Well, in this explainer, we're going to get you some answers. We'll start by putting these huge gains into perspective. Then we'll look at what really fueled this fire, see how the market handled some pretty serious bumps in the road, find out who the big winners were, and finally, take a look ahead to 2026.
All right, first things first. To really wrap your head around how big that 51% gain really was, we need to see how it stacked up against other places you might have put your money in 2025. And this comparison, well, it's pretty fascinating. Okay, so gold had a fantastic year, no doubt, posting a 65% return. But look at how the KSE 100 did against other traditional investments here in Pakistan. It delivered 3 times the return of real estate and more than 5 times what you would have earned just leaving your money in bank deposits. The message here was loud and clear. If you were looking for high growth, the stock market was absolutely the place to be. So what was the rocket fuel for this incredible rally? Well, it wasn't just one thing. It was this really powerful mix of positive economic factors and some very decisive policy actions that came together at just the right time. Honestly, it was like a perfect storm of good news. First, the state bank cut its main interest rate. That made borrowing cheaper and savings accounts, well, a lot less attractive, which naturally pushed money towards the stock market. Then, progress with the IMF unlocked billions in funding, and having a stable rupee gave investors a lot of confidence. Seeing the privatization of huge companies like PIA showed the government was serious about reform. And then, to top it all off, major global agencies actually upgraded Pakistan's credit rating, basically giving a big thumbs up to the economy. All of this together just created this powerful surge of confidence. But let's be really clear here. 2025 was not just a simple straight line going up. The market faced some major challenges, and the way it managed to weather those storms is actually a huge part of this story. This timeline from May is the perfect example. A regional conflict kicked off a sharp, almost 6% drop. Ouch! But just look at how fast things turned around. Some positive diplomatic news sparked a huge gain, and then the moment a ceasefire was announced, the market didn't just recover, it roared back with an almost 13% rebound. That showed an incredible level of underlying strength and real investor confidence. Okay, so with all this crazy momentum, who is actually doing all the buying? And which sectors got the biggest rewards? The answer to that question is, for me, maybe the most fascinating part of this entire story. So where did all this buying come from? Well, here's the crucial part. This wasn't about foreign money flooding into the market. Nope. This historic rally was fueled by the conviction of Pakistani investors right here at home. You can see the breakdown right here on your screen. Local mutual funds and individual investors, just regular people, were the 2 biggest forces. They poured in over $500 million combined. This shows a major shift in thinking. As those interest rates fell, people started taking their money out of safer, low-return savings and putting it right into the stock market, chasing that higher growth. But here's the really wild part. At the exact same time that local investors were piling in with so much confidence, foreign investors were actually heading for the exits. They sold off a net $364 million worth of shares. Just think about that for a second. The market absorbed that massive sale, a huge amount of selling pressure, and it still rallied 51%. That just proves how incredibly powerful that wave of local confidence truly was. It just completely overpowered all the foreign selling. And where did all of that money go? Well, the gains were led by some real powerhouse sectors. Banks delivered an unbelievable 116% return. The cement sector wasn't far behind at a huge 90%. And fertilizers also posted a very strong 30% gain. These sectors were the true engines of the 2025 rally. So after a historic run like this, the obvious question on everyone's mind is, can this momentum possibly continue? Let's take a look at what the experts are thinking for the year ahead. You know, the general feeling out there is pretty optimistic. Most analysts seem to believe the fundamental drivers are still there, and that this isn't just a one-year wonder, but actually part of a much longer bull cycle. The key is pretty simple, really. As long as the broader economy stays stable, government policies remain consistent, and there's money available to invest, the stock market seems to have a pretty favorable path forward. And that brings us to the final, crucial question. The market has proven its resilience time and again. It's been powered by incredible local confidence, and it has delivered world-beating returns for 3 straight years. The big question now, for 2026 and beyond, is simply this: what's it going to take to sustain this historic momentum?